The International Monetary Fund, IMF, has raised Nigeria's economic growth forecast for 2025 to 3.9%, a 0.5 percentage point increase from its earlier projection. The fund attributed the improved outlook to stronger macroeconomic stability, rising investor confidence, and increased oil output. The upward revision was announced on Tuesday during the presentation of the IMF's latest World Economic Outlook report at the ongoing World Bank IMF annual meetings in Washington, D.C. For 2026, the IMF projects Nigeria's growth to further strengthen to 4.2%, reflecting a 0.9 percentage point improvement from its previous forecast. The fund said the revision reflects reduced domestic uncertainty and Nigeria's limited exposure to the new tariffs imposed by the United States, which have had minimal impact due to the country's modest trade links with the United States. Joining us on the show to discuss the positive outlook by the IMF and what this means for Nigerians and its citizens is Johnson Chukwu, Chief Executive Officer at Cowry Asset Management Limited. Good morning, Mr. Chukwu. Good to see you on the morning show.
Good morning. Thank you for having me. Good morning.
In flesh and blood.
Welcome to our studio.
How do you doing, Rufai?
Good to see you.
Good morning. How are you?
Good morning,
All right, so the question I would like to pose was already embedded in my introduction as to, so many positive news with regards to the macroeconomic outlook from the government. You know, inflation rates, trends coming down, more investor confidence according to what they've said. But the big question that we keep asking is that when does this begin to translate, or how does this begin to translate for Nigeria as a whole? In terms of attracting more investments. Before I had said earlier that the investors we are attracting is not commensurate to the wins that we're said to be making macroeconomically. And then also, of course, for the Nigerian people themselves, at what point would take-home salary be actually able to take you home based on your purchasing power?
I think I've started from the last part of your question, because that's what appeals to most Nigerians. The question is that inflation is coming down. There are green shoots. In fact, there are green shoots when you talk about the macroeconomic environment. You talked about declining inflation. You talked about stronger foreign capital importation. We saw about $5.6 billion capital importation the first quarter of last year. But unfortunately, most of it was portfolio investment. Only about 126 million was foreign direct investment. We've seen naira stabilize. We've seen the exchange rate in the region of below 500, 1,500, the region of 1,450 or thereabout. So they are green shoots. So, but Nigerians are asking themselves, so why am I feeling it? And it's very simple. The concept that your standard of living will improve as the economy is improving is because your income level is improving. And your income level must improve at a rate faster than the rate of increase in price levels. We saw inflation at a rate of 18.02% in September. So what that means is that if you consider that if inflation is cumulative, so, and we are talking about a base effect, because last year, average inflation was 33.18%, call it 33.2%. So when you add the 18%, you are talking about something like 51%. So average price levels have increased over the past 20 months or 19 months by about 51%. So an average household income must have increased above that 51% in the last 20 months. For you, or 22 months, for you to begin to feel the impact, or for your standard of living to improve. Otherwise, you are seeing a continuous erosion in your standard of living. As long as your income is not increasing above the rate of inflation, you can no longer continue to afford the same quantity of goods and services you are consuming with your income level. And that's why most households are saying, look, all these things you guys are speaking is grammar. We need to see that. But that does not take away the fact that it is good inflation is moderating. Good. But what should follow is that household income should also start increasing. So when that starts increasing, which will come from, are we having the right investment? Is the economy actually producing? We saw GDP grow at 4.23% in the second quarter of this year. So we need to see a stronger GDP growth rate, and not just a stronger GDP growth rate, that also creating jobs. And that would mean that this sector of the economy must start growing. And that's what Nigerians need for us to begin to feel the impact of improving the macroeconomic environment.
All right. Well, some people are arguing that the indices, we're seeing these particular indices, but we're ignoring some critical indices. If you look at the literature, you'll find that Nigeria hasn't reported a Gini index or Gini coefficient in several years. We don't have the statistics or the data to show us whether inequality is increasing or decreasing. And generally, since 2023, since the introduction of these new reforms, it is widely believed, although without confirmed data, that inequality has increased and that these macroeconomic indices will point to positive development in the business space, but like we speak about in the households, the gap is growing between the haves and the have-nots, if I may call it that. Now, where do you think this gap will be filled? Because like we said, we're waiting for the investment to come in. There's a number of commitments and so forth. We're waiting for the productive sector to become more active and so forth. But at what point do we really say, if I may use this parlance, that the coconut has dropped, that we've reached the point where, yes, we're going to see this inequality gap begin to close?
Okay, Bimpa, there's other report that actually indicative of the fact that even the inequality gap is expanding. There's a report that said about 139 million Nigerians are living in abject poverty. That's an indication that more people, because the population about 230 million, I mean, that's estimated figure, which simply means more than half of your population are living in abject poverty. And that does not also recognize the fact that because of the inflation rate we've suffered in the past 2 years, most middle-income households have been pushed to low-income households. So there are very few people who are actually earning a lot more improved income. So what we are seeing, you may see a few people there at the top and a lot of us down there on the ground. But the key question is, like what you asked, how do we begin to fill that gap? What do we need to do that will make the economy to grow, not just growing, but also for households' income to grow?
From the middle class to return.
For the middle class, for us to recreate the middle income. We did our quarterly business review yesterday, and those are some of the things we discussed extensively. And the key thing is that, the quick question is that we're attracting foreign capital inflow, but we've not started attracting the core capital we need. It's not enough for the government to go to a television station and say, we have, this company has indicated they're going to invest 2 billion or 20 billion. We are not seeing the capital inflow. Last year, total capital importation that had to do with foreign direct investment in the country were for $670,000, less than $1 million. The whole of last year. This year, first quarter, we only have $126,000.
Wow.
That is a fraction that people put, $126 million. Last year was $670 million, less than $1 billion. That is less than what you need to start a factory. Okay. So we're not seeing that right investment. And until we begin to see it, because the truth is that the economy today as a structure does not have the local long-term capital enough that will drive reproductive growth. And that we need to come up with policies that will ensure production into the country. We've allowed offshoring of production in the last 2 years. We saw P&G lift, Procter & Gamble lift. We saw Smith & Beecham lift. We saw several companies lift. And over the past couple of years, we've seen continued depopulation of our manufacturing sector. It is the manufacturing sector that will create the middle income jobs that will allow average households to be comfortable. It's those manufacturing sector that will make us to have a more stable macroeconomic environment where you are sure you are producing what you are consuming. So until we'll come up with right policies that are focused on the core structurally changes in the economy that will allow for reshoring of manufacturing, we are going to be dealing with this. Or even if we have further improvement, we are still very subject to the volatilities in macroeconomic environment.
I have two quick questions. Are we being sincere with data? And I say that because recently we rebased and the weighted average for food was dropped. So the data coming out as regards inflation rate, are we sure? Are we being sincere with data? Look at unemployment data. Humor me, because based on the data and the parameters now, they say Nigeria is like 5% unemployment rate. 4.3% unemployment rate. So are we being sure about the data we're getting, or we are masking it for propaganda? Secondly, we are celebrating forex stability. But what's the real value of the naira? based on purchasing power parity. Some are reckoning 1,100. The talk then, when we started developing, was the fair value of the naira. Are we there yet? So, is this our green shoot we are signaling? Is it the real green shoot?
Okay, Rufai, there are clearly some green shoots. Take, for instance, if you look at the inflation figure, the food inflation came at 16.87%. But if you look at the month-on-month inflation, they said the actual prices dropped by 1.57%. Price levels in August compared to price levels in September. And when you dig further, they say those prices that dropped were corn, which we know there's corn everywhere. I mean, that is not disputable. Gare, potato, beans, tomato. You know, when we're in the harvest season, some of these things are perishable, like tomato and other things. So when they produce, if they don't sell by evening hours, they will give it out at any price. So you see prices drop. So that will be difficult to debate. On the issue of rebasing and modifying the base, like you pointed out, for instance, food and non-alcoholic beverages used to account for about 51.8% of the weight basket of consumer price index. They dropped it to 40%. They also moved restaurant food, the food you go and eat in restaurants, they moved it from food and beverages and now moved it to restaurant and accommodation. So there are some adjustments, but that's a different topic. That's the
main topic. I know you have to go quickly, but that's the main topic. Because you see, we can have a false sense of delusion and call it green shoots. See, it's just like somebody that has gone to check his BP with a 40 BP machine. And they are giving you reading, and it's in your favor, you are happy. The day heart attack will come, you will not be there to tell the story.
Well, it won't be, it's not that bad. There's some improvement. I mean, FX rates from 1,000, it will drop.
The real value of the FX.
It's difficult for us to determine the real value on this table, but I can tell you some of the factors. One, we've seen some improvement in our balance of trade. Half year, balance of trade, positive, we had a positive balance of trade of about 12.6 trillion naira. So that will flush into your reserve. But having said that, we also still recognize the fact that the reserve we have today, the growth, the improvement in reserve was partly driven by foreign portfolio investment, which is what called hot money. So, and they are there because rates are quite strong. And rates are dropping in Western countries. We've seen most of the central banks have actually dropped rates. So it makes sense for them to come here, and particularly at a time when we are seeing appreciation of the local currency. But that does not take away the fact that, look, we've seen changes. We've seen changes. The key thing, are they enduring? Are we doing the right things that will make sure that this is not a flash in the pan? And that, for me, is a core challenge the government has to face. The structural changes in the economy are not yet on ground that will allow for us to reassure manufacturing that would lead to stable macroeconomic environment in the long term.
All right. Okay, so you have to go. But I just very quickly, because we've talked about the issues and the reality on ground, but very quickly, you talk about policies, structural changes. One or two recommendations that you would like to see, especially as you mentioned, the manufacturing sector and the wave of companies that have divested away from the country. What would you recommend?
I think the first thing the government should do is identify the sectors they want to stimulate. Obasanjo came and did cement. Okay, the previous government have done petroleum refining. Policies drive investors' interest in sectors. We've seen a transformation of our telecommunications sector. It was policy driven. Okay. So the current government have to identify which 2 or 3 sectors that we have competitive advantage that they want to focus and create incentives that will stimulate private sector to invest in those sectors.
Excellent. Thank you so much for your time with us. Mr. Johnson Chukwu, we look forward to having you back on the show, and don't make it too long this time.